Good evening. I guess it's just me tonight. We've got a couple of our members are a little bit busy with, well, life happens. Anyway, I thought I would just give a quick after hours review of what we've found in the market today and what we see for the nearby horizon. Looking at a couple of metrics on SPY here, we can see that we're set up for a little continuation in this bearish move. However, you should know that we've actually found support right at a key zone, and we closed this gap from all the way back here from 610 to 613, that over the weekend gap that we had, a massive massive downturn on SPY. So let's go ahead and put a little marker there and see what's in store for the near future. That's about 376.75, about pretty darn close to where we closed today. But we've got all this range that we can run into tomorrow, and that's not even the worst part of the situation. The worst part is we're kind of looking like we're going to fall into the rest of this channel, and unfortunately that has us probably opening the day tomorrow in a gap down position, looking at a open probably around 374, 375 in that area. Very possible. That's if futures continue to carry bearish over the opening here, and we're opening in the futures market in about 38 minutes or so. So watch those first few candles on that open. That'll be the Globex open, and essentially you're going to see some movement at that point kind of take over right around midnight hour time. Will be pretty interesting. So pay attention to the futures tonight. You'll get a good idea where SPY is going to open. And if you indeed trade the futures, go for it. Take some wax out of that. But looking at this becomes our measured move, upper leg, and then we had accumulation, lower leg. This is a 3-leg setup, and that setup pretty much puts that open right on point. Just if you kind of take and measure the range in that. If we get to be too much more bearish, we've got the rest of this channel to fall into. This is like the median of that channel. This is angular support, angular resistance. I had a failed breakout here, and if we keep continuing in this area, if we're gonna keep sliding bearish, watch my cursor. You can see the horizontal line going all the way to these control areas over here. Guess what? That bottom one lines up with about the middle of this range. So if we remain bearish and we crack that very critical support area of 362 eventually, ooh. I like being a bear. I love trading because trading bearish because, man, stocks tend to take the window up and the stairs up and the window down. But boy, you get into a situation where you've got just an absolute bear fest. Look out, because these channels kind of love repeating. It's been kind of said before, the market doesn't necessarily repeat, but it it does kind of rhyme. So definitely watch for some bearish movement. On the contrary, we could see a little pullback in this tomorrow. We did have quite a range extension through the JPOW stuff that we had going on today, FOMC, and we've got some chance of maybe coming back up into range and might get a shot at opening at like 378 on a rebound. But man, it'd be more of a dead cat to me. I know that dead cat bounces can be interesting to trade as well. I love to watch them pop up in the morning and then tip over and go and continue shorting it on the tip down. So you can kind of trade both directions that way. Lately, we've been kind of teaching our members how to trade strangles, and we're having some great success trading Ford as a particular equity with those strangles. Great learning stock. We've had some windfall yesterday. That was pretty much glorious. We got into some strangles over here on the 19th, and overall, I was able to kick off my long call on that position right at the open on that little wick right there. I don't know if you see it. It popped up just a little bit. It was already in the negative from that close, but when I went to do it, my set, I was actually adjusted. So I had opened the strangle back here on the 16th, and I was adjusting the legs. So I went and profited the puts, profited some calls, and then I went to add some puts back up here, and it didn't really pull back enough to add back an equal amount of calls to that position. to make it a neutral position. So I was actually off balance with a few extra puts in this scenario, and I took on a massive 580% return overall in that drop. And I was literally watching the 30-second channel or 30-second chart at the bottom of this, just scalp the living crap out of it right at the exact moment it turned around. And then I was able to get back into legging back into strangles in this mess and rode that all down. So towards the end of the day, went ahead and also demonstrated the Condor situation where you open debit spreads on both sides of price, and legged out of the put just a little bit too early this morning. The short put that is up on that candle there, pulled back and it ran away. I could have had a lot more profit from that, but overall I was able to leg this all together and have a net cost of about, opened it at 28 cents for the whole set per contract spread of the Condor yesterday, and legging around in that, I was able to reduce that cost basis to just 15 cents per spread today, and I'm holding the expiration on next Friday, the 30th. So I leg in and out of the short contracts to generate income and also reduce the cost basis on a long position. So I'm overall wanting to hold a strangle with a negative cost basis if price continues to range. If it just blows through, I'll take profit on it anyway. I can just close the whole position for a net profit. But if it continues to leg around in this range, I'll continue to leg around those short options and continue reducing cost basis. And I have typically till about Tuesday to walk that through, and by then I could probably either be at a zero cost or even a negative cost basis, and then just take the profit on Wednesday when I'm pretty much closing Tuesday with a net neutral position that is free or even being paid for. So kind of a neat strategy to do. Just kind of demonstrating to a mixed group of people with both beginners and intermediate traders, and just kind of walking through all the possibilities of what you can do with options. And let me tell you, it's great to be able to teach this stuff, but not only does it make me a better trader, it makes everybody that I teach a better trader. So it's been kind of a wild ride, and I can't wait to show how this all works out by the end of next week. So hopefully the next Thursday's show we'll have Devin and Stone back with us, and we can have a little bit more hijinks and get the back and forth witty banter going, and have a laugh or two. But in the meantime, I'm kind of by myself today, so it's just time to get serious. One other thing we're looking at, and we're kind of sitting in a position we were able to leg a little bit on with Netflix, and I ended up going into a Condor on that one as well with this wild price action. So I'm still kind of net neutral as far as my cost basis on that goes. But I originally started this yesterday with a call debit spread, scratched that the other day with a call debit spread, wrote all this up, and it was kind of neutral because it's out of the money enough to where it wasn't making great profit. It was yesterday, but I was busy with my forward position, didn't get a chance to take the profit on that. And then today I was kind of able to leg that into a fairly neutral position until we can decide whether we get out of this range or not. But the idea is it's kind of one of the only green spots in the market right now. Today's volatility had it kind of closing a little lower than I'd like. It got below that 240 zone that we're looking at for key resistance for that breakout. And the idea is it can possibly close this old channel or even half that channel pretty soon if it remains bullish. But we're going to kind of keep an eye on that. If this trend breaks down, like if I see price action threatening to break too far below that 8 period tomorrow on the open, I'll probably just close that position and take my knocks and walk away happy with my forward position. So one way or another, there's many ways to skin a cat, and there's many ways to adjust a position so that you can minimize loss. And also there's ways you can just close a position and cut loss and walk away and move into something else. Market is pretty versatile. You just trade what's in front of you and be ready to either adapt or sacrifice a position one way or another. More often than not, the idea is keep your wins bigger than your losses and more frequent than your losses. You'll do well. Anyway, it's going to kind of about do it for me today. I'm kind of at a point in this market where it's a little hard to find a decent swing trade. And unless you're trading the inverse ETFs, you're kind of stuck trading, well, what you have. And we know that forward works really well for strangles, and we also know that SPY works really well for day trading. And I think after tomorrow, some of that implied volatility that's been stretching that delta out way higher than it should be on SPY should come into focus and provide a lot more stable day trading with a lot less outlay, because I know that those options are definitely overpriced lately, as if they weren't already. So hopefully we'll see some stability come back into the market tomorrow, and might even start going trending into next week. And it's looking more bearish than bullish, I'll tell you that. But at the same time, we're kind of ready to change, with the leaves. If we see it start to make a reversal, start to become bullish, whatever we got to do, it's pretty easy to adjust that. Anyway, have a great afternoon, everyone, and hopefully we'll see you guys tomorrow. And I'll be broadcasting our live stream tomorrow over YouTube. There's, of course, a little bit of a delay. If you're trying to day trade with us, it makes it tricky, but we do drop a lot of knowledge in there. So, whether you join us or not, and we are very cost effective, by the way. We're probably one of the lowest priced communities out there for now. Just if you'd like to join us, go ahead. We got lots of hands-on ability to teach you how to do these things, how to take on these positions, how to walk out of them. And overall, we go the whole 9 yards. We teach you price action. We teach you everything we know and everything that's made us into, we trade for a living. So going into the membership, it's great because you get that hands-on treatment. We'll walk you through. You can ask all the questions you want. We answer them. We love talking to people live in our chats. I don't know if you've been watching our live streams that we've been feeding out to YouTube, but we have back and forth conversations in our Discord channel, on our voice channel, pretty much all day long as we're streaming. And it's great to be able to have that sense of community, to be able to communicate back and forth, get questions answered. And it's, some people are a little shy to ask these questions. You get one person asking a question, everybody's thinking the same thing. Everybody gets the answer, and that's the great part. That's what makes it really easy to learn stuff. So if you are interested, check us out. Try us out on the website. The website's under a little bit of construction at the moment, but it does work. All the back end stuff is still working. And essentially, we are kind of growing and improving day by day. So come check us out. We'll see you guys later. Have a great day.